Welcome, Dylan. Welcome, Astral Eyes. And Neji Juga. Love to Abby. Beste Vries and Arnold. Good to see everyone. Let's wait 2 minutes and then get started. No. We got some interesting price action to discuss. Hey, welcome, Zach and Abby as well. Let's get started. Let's delete it first. What we had last week was the new range where we had tab 1, basically tab 2, but because the range only got confirmed here, this is tab 1, this is tab 1 at the lows. This is potentially tab 2. And then last week we had that dump into FOMC, which was right here. A lot of sellers got trapped, and from there we basically started a uptrend. And then over the weekend we had this local range formation with the potential to give a distribution. It gave a tab 1, a tab 2, and then a tab 3, but then it never confirmed it fully, so it was not a short. I was not around for it, but if you look at it from just a entry trigger perspective, then we had tab 1, tab 2, tab 3, and you never broke your structure back to bearish. So you have low, higher, high, higher low, higher high. That was never broken back to bearish. And then you got basically a 4 tab, which was tricky. That broke structure, and then you got that full reversal. But this is always around on Sunday night. Then you have to be careful with these local models, and especially if you have a lot of liquidity on one side. So what I often say is that you want to play your ranges, which is this high and that low. And then if you have internal ranges, very often they are used as traps to grab to create even more liquidity to eventually take the main range. So this one was already sketchy in my opinion, because why would you already reject just before taking out these equal highs with that liquidity above? So you can also see the price came back a bit and then shot higher. Finally took out those equal highs into 80k, and now we have a very interesting playbook because we finally cleared the highs. So this could be the high time frame reversal we have been waiting for a very long time. However, to confirm that, you need to break structure back to bearish, and otherwise structure remains bullish. This whole run from the low up, people have been shorting it, ignoring structure, and yeah, that did not work well for them. For us it did. So I'm not gonna change plans right now. So if we just follow main structure and go, for example, to the 4-hour, then the swing structure remains bullish, which is basically high, higher low, higher high, higher low, higher high. So just following the 4-hour bullish swing structure, you can put in a higher low for a higher high still. So that's important to keep in mind. Swing structure remains bullish. And we can watch what is the internal structure from this low to that high. Then, for example, on the 1-hour, it's low, high, higher low, higher high, higher low, higher high, higher low. Then right here, higher high, high low, higher high. So did we break 1 hour structure back to bearish? No, not yet. Instead, we swing filled the 1 hour market structure low, which means that you grab liquidity below your market structure low, but did not break below it, which technically makes this high a weak targeted high. So we are in an interesting playbook where this could be the weekly high, since it was an early week push higher, but technically 4 hours structure remains bullish, 1 hour SFP'd, so there's no structure confirmation to say that this is the high. So once again, sooner or later we will mark the top, but I don't get why people are already calling for the top, what they have been doing 60k already, but technically this is bullish until proven otherwise still. However, because we had this very early week push higher, and we often create the high early in the week, I can see this as the high already for the week. However, before calling for that, you need to break structure or get a failed range reclaim. So from here, the two outcomes, if we want to confirm this as our high, we want to at least break our structure back to bearish, which is now this level right here. So confidently close hourly candles below this level. So we do this, break below it, then it's very likely that you get a lower high for lower low. Other option is that this is a range deviation. So tab 1, deviation. But then you want to see your internal structure break back to bearish while tapping into those levels. So what we have is, we have this clean supply. So super clean gap right here. And this was the breakdown level from early this morning. What can also happen is that you watch your structure from the low up. For example, from here, high, high, low. And then you want this structure to flip back to bearish. Tap into that supply, flip back to bearish. And then this is another short opportunity. If you get this, like local 3 drive into supply, this is super clean short, which is scenario 1 for me. Scenario 2 is that we, from here, bam, break this hourly structure back to bearish. Then any retrace is a big short. And other than that, until proven otherwise, it is still bullish. Which means that if you want to take shorts, triggers need to be super clean. Otherwise you are fighting the trend. And that has not been going too well for most people. The market has been nasty. Well, it depends. I think if you just remained unbiased, that it was pretty clean. It delivered quite a lot of clean models. But yeah, if you've been overly looking for shorts, then it has definitely been tricky. Welcome Lise, welcome Marco and Sudo and Rice Baby. Good to see so many people. So yeah, all in all, early in the week, we had this nasty push higher, then sell off. And now it is very, very key what we're gonna do if we reach this supply or if we break structure. Until proven otherwise, I cannot become too bearish because no structure has been broken. We only have 15 minutes, which was basically this structure. High, high, low, high, high. That one broke back to bearish. So that is the only signal now for potential shorts, is a 15-minute break. But 1 hour, swing failed, 4 hour is bullish, daily is bullish, everything's bullish. So coming hours and coming days, it will be super important how we react at this market structure level. Do we get an hourly break? And if we come back up here, do we reject or do we just squeeze higher again? Because I think, once again, that still majority is short biased, that everyone wants to short, they want to catch the top. And every time we take the highs, we squeeze higher, which means shorts getting squeezed. And market maker knows that as well. As long as they can squeeze shorts by just pushing it a little higher, they will squeeze them. And then also bring like the mentality, fuck everyone over. And if we zoom out, how I view this range is that this was an equal high, so I don't count this as a tap. I see it now as tap one, this potentially tap two, which means that catching the short here can be too early if we watch it from a Wyckoff perspective. Let me show you that on, for example, on this chart. Like, let's say that, oh, well, let's do it on the normal chart. Yeah, so on spot, this was equal highs. So let's say we watch this as the range. Then you basically have tap one at the high, tap one at the low, tap two at the high. How I can see this progress is that everyone wants to catch the high. They have been doing that over and over again. What can happen is we could also just continue our 4-hour bullish swing, in which this can still pull higher, or we get that pushback and then higher. Or this is the start of the distribution, in which this is tap one, this is potentially tap two, but that could mean that we might get this, tap three, and then go down. And then you have like a healthy time displacement between your taps. And everyone is too impatient for this scenario. I think this will fuck over everyone again. Because even if you go down now right here, people think, oh, I have the top, only for price to reaccumulate here, come back, maybe even make a 3 drive, and then fuck everyone over. See, this, I think it's too short for a very high time frame reversal. So curious how it develops, but I'm not too confident for Team Beer just yet. Let's see, chat. It's bullish because we just wicked below the previous low, so it's not clear. Yeah, so if you watch at the hourly market structure, from the low up, you basically have high, higher low, higher high, higher low, higher high, higher low, higher high. The purpose of this high is to break this low. Price failed to break below that low. Instead, it wicked it, which technically means that it failed to make a lower low. And then that means that this low failed to break this former low, in which the high that brought you there is technically a weak targeted high. So purely following market structure, price can return to that high. Because we swing failed the low. Let's see what gold is doing. Gold is pushing high. I was looking for longs. I was watching this 1, 2, 3. But it looks like it was more of an extended. So let's quickly look at it. I'll go back to BTC in a minute, but I think gold is gonna moon. So I want to catch a long if it gives it. One, two, three. Bullish 3 drive. Here it's breaking now internal. Back to bear, back to bullish. Bullish boss. And we only have liquidity above us. So what I would like to see is, for example, a setup like this. So I think this is was a fake move. this early weekend dump. And above this local supply, there's nothing but liquidity. So let's see if we get that. Other scenarios that it turns into an model 2, which will be cleaner. If we already squeeze higher, then I would watch for a retest of the range low and then play model 2 with 1, 2, 3. Basically 3-tap setup. Okay, back to BTC. So BTC, yeah, we failed to break below it. And Dylan, what about the supply above? Yeah, as just explained, structure remains bullish. But the only way I can see it being bearish is that this was an early week deviation, manipulation move. So if you show weakness in these supply zones, then it's you can take a short, either here or higher up. But for me, structure is always king, and we did not break significant structure yet. So what I would like to see for the bearish case is to get a clean break below and then go lower. But for now, yeah, structure is up. Everyone is looking for shorts. I would once again not be surprised if we squeeze them out. To me, still looks like max pain is higher, seeing the sentiment. So little alert down here, alert in at supply, and watch how price reacts. Gold. Yeah, there's still potential to tap. We did not break below the deviation threshold, but a super nice wick, which makes a model 2 more likely. But playing model 2 is always, or like 2-tap. This is the 2-tap. It's not, it's always better to play the 3-tap. But I'll keep an eye on it. I want to quickly discuss the Tao short. Yeah, because that one was textbook. This is the best model you can have. And this is one we play often, but now it was like an extended one. So last week we missed the Tao short, unfortunately. Tao long, which was this. Let's delete it. This model 2 with the 1, 2, 3, and then the break back to bullish, which was basically your entry trigger for the long, which was already 2.5 to your technical target, but the main range high was here, which was open because this was a lower high. So that could have been your like main target for 6R. And from there, price just squeezed higher, creating a lot of sell side liquidity, and then started this range, which is like textbook, where you have range high, range low. So tab 1 at the high, tab 1 at the low. This is like textbook Wyckoff, like almost too perfect. Then tab 2, here you can watch for potential distribution models because you have sweep of your high, very narrow sweep. Then you come up, basically have structure from high, higher low, higher high, higher low, higher high. 1 minute. Then this is your third tab, but you can only confirm your third tab by a good break structure. Well, here, can you watch this pullback? How many candles? You always need 2 candles down to call it a valid pullback. So you can watch what's the highest time frame. You have 2 candles going down. Well, on the 30-minute not. On the 15-minute, you have 2 consecutive candles going down. So this is your break structure, which technically confirms this as your protected high, target, range low. However, you're not gonna short it here with your stop there, and then your technical target is the range low, because it's 0.7 R. That's not worth it. So then you can watch always what is your extreme liquidity and your extreme supply. Well, extreme liquidity is always your first lower high in a distribution, or your first higher low in an accumulation. Well, here you have low, lower high, lower low. So then this is your extreme liquidity. Well, price came back for that, also with 5-minute structure. So you basically have high, higher low, higher high, break. So this was also a valid short already, playing the 1, 2, 3 model 1 into model 2. So if you were behind your screen, this was like a valid short. Stop, fourth tap, and then target, range low. However, price was so kind this morning when I watched to where I identified this was already break. So then you have your model 1 confirmed high going over into model 2, in which this is now your confirmed high. So a pullback into that level can offer a clean short targeting your range low. And then if you watch, what was it? Like 15, yeah, super clean 15-minute supply. So you have your last buy to sell, creating supply. And then price here perfectly came back for it. Also perfect confluence with the fib level. Right here. Perfectly in the 786, perfect tap. And then it sold off aggressively. And I always want structure on my side, but there was only on the 30 seconds structure. So if you watch with high, higher low, higher high, higher low, higher high. So break 1 was here and break 2 was here. And then that is your, basically your short for, with this as your invalidation. So I shorted, not sure where my short was, maybe it was around there. Stop there, and target was below, let's see, I targeted a little 281. This, so my entry was lower because I did not have, I had like a 2.8. So my entry was around here. And I just took the short because the invalidation was so super clean. And then it went to the range low, perfectly wicked into my take profit. And now it is a super clean distribution model. But we can always watch for what is the highest time frame. The highest time frame is bullish into proof not wise, which is this swing structure. So if we watch the 4-hour with high low, higher high, so you don't want to break 4-hour below this level. Otherwise you have a 4-hour bearish boss, and then you could get bearish again. So since the trend is up, you always want to favor longs over short. We just had a super nice short, but high time frame remains bullish into proof not wise. So now you can watch, is price potentially flowing over from a distribution into an accumulation. And then this is your range. Let's make it a deviation threshold where we ignore the distribution. It already played out because we swept the low. And then this is now our potential accumulation to watch. With tab 1, tab 2, depending on how price reacts. But if we come back for model 1 into this demand, flip structure, then I'm just going to play the model 1 accumulation again, back to the highs, and likely beyond. And I really like this POI because we still have this imbalance right here with that super clean demand, which is untapped. And this is a key level that bulls want to defend, because if this demand fails, then you directly take, like this is only liquidity. So the moment you start invalidating the demand, you probably cascade much lower, which then means that you have a 4-hour bearish breaker structure as well. So bulls really want to step in around here. So super nice short. And now we can watch, does it flip over into an accumulation? If not, then you break 4-hour structure back to bearish, and then you can get a deep pullback again. So that's it for Tao. Let's see. Why doesn't the equal high count as a second tap? It's on BTC. Why doesn't the equal high count as a second tap? Well, technically, because I'm watching this as the range high, range low. So this is like tap 2. Like if you draw your range, I draw it from high to low, but you always need to tap your mid-range first to confirm it as a valid range. So this was the local range, but you cannot extend it from there all the way to the low. So I see it as a swing, high, low, and then this was an equal high. So then for me, this is tap 1, this is potentially tap 2. Because only if you come down, you test your mid-range. So now it's high, low, and only here you validate this range. So this cannot be your tap 2, because you need high, low, mid-range to validate your range. And because on Binance this was an equal high, it's not a good sweep either. Okay, BTC is getting super interesting because it's now getting into the supply level, where you either get your lower high or it just pushes into new highs. And I think everyone is looking for shorts, so I would not be surprised if they squeeze it again. I'm not long, there was no entry. But I'm watching for gold longs. This is basically the textbook setup, for an accumulation, but then on a higher time frame. But this is the catapult. Start taking the first level of that catapult and you can squeeze very quickly. Okay, so BTC, let's see what ETH. I haven't looked at ETH. What do we have? Like on ETH, the structures, oh yeah, this was it. On ETH, the structure is even cleaner, where we have range high, range low, tap 2, potential accumulation. So price can also come back for extreme demand, which is here, to create the third tap. But I can already see it squeeze as well, because locally ETH BTC broke structure, but here you have super clean higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this can be just mitigation continuation. And I also think that because here we had supply mitigated, and basically an accumulation. So I think this can either squeeze higher, or if it comes back down, then I'm gonna look for a model 2 1, 2, 3, or for a model 1. And model 1 is maybe even cleaner, because last week we front ran this demand, inducement, so you can also go for a model 1 and then push higher. But to me, it looks bullish. I still don't get why everyone is so bearish. And there are potential good reasons, but potential is worth nothing in trading. You just need your confirmations, otherwise it makes no sense. Okay, so we have ETH. Is there locally, like swing structure is bullish. It's now also coming back into that breakdown supply, which was this morning, low, lower high, boom, low, low, break above here, and you go to new highs. You are also above your point of control and value area high. So also for ETH, there is nothing really bearish on it yet. Break below this level, then you break structure and below your point of control, then you go back to your range low. But until then, this is more likely to be just a higher low for a higher high. Then we only have hype left. Hype, yeah, just watching this local range. Tap 1, tap 1, tap 2 at the highs. Last week we had that clean 3 drive, and now this range. So depending on what we do first, like if we come up, make a model 1 into that supply, then I'm looking for just the reverse of this. This was a bullish 3 drive. Then I'm looking for a bearish 3 drive into extreme liquidity and extreme supply right here. And if we first come down, tap into that demand, then I'm looking for the opposite, which is an accumulation. 1, 2, 3, model 2, or a model 1. Same as always. So just an alert at the high and the low, and then watching how this develops. Looks like a clean range, so then we just play it as we always do. And then we have clean demand below it, which is this sell to buy with this imbalance into demand. So this is super clean PY for tap 2 of your accumulation. So hype, pretty interesting. Tao, also pretty interesting. ETH, not really clean setup wise, but looks pretty good. And BTC, yeah, I think looks strong. There's no, it could turn into a short, but then you want to see clear weakness. Right now, this is not weakness. So yeah, you either come back down now and then start like taking out your high again, and then get like a local 3 drive here. Then I would short it. Otherwise, I think I will not be surprised if this could be the local weekly high, but this could also be the weekly low, because it's Monday. So either this is the high or this is low, pretty high chance. And then I will not be surprised if either this was the low already. So let's look at the order flow, what is happening. Okay, let's first look at the TPO. We have, yeah, it looks pretty healthy. Point of control above us. Besides that, not really interesting. And locally, we had the same as last week, where we saw open interest CVDs both push higher into early Monday, created a high, and then unwind everything. So here you see they build positions, push it high, and then here all the positions that have opened are already closed. So that means that all the longs that were in here are already wiped out, which is pretty healthy if the market wants to push higher. So what can be a reason for this is that market makers are bullish, they push price higher, let longs jump in, wipe out all those longs by pushing price down, and now they can push it higher while nobody is in longs anymore. Because everyone got nuked on this move down, they used that liquidity to fill their own bags and then push higher again. But the key is this level right here, where you either reject, or if it pushes higher right now, then new weekly highs, and then every short will be wrecked once again. Here it looks like we had some sort of a bullish tree drive. Here, 1, 2, 3. Yeah, this could have been the bullish reaccumulation. Look, here it's gonna squeeze. Let's see, was there entry confirmation? Well, here you broke internal back to bullish. Yeah, watch this squeeze, because everyone is short again. Scared to miss out the ultimate short, but that will come once they stop shorting. It's literally always the same. And if it makes new highs once again, then they probably don't dare to short anymore. And that's when I'm gonna be super interested in shorting. Maybe new high, then come back, and then eventually create the third tap, and then swing short it from there. Also from time distance perspective, this to me makes no sense to be the high already. So yeah, are there any questions? Let's see, this is the most refined. Get above this level and you squeeze out, everyone. You also have like a bullish RIMC right here, if you watch it from a range. We're at 1, 2. This was basically your reaccumulation, 1, 2, 3. You broke above your deviation threshold, so this is now your demand range, in case you come back. Oh, let's watch USDT, because that one is also a funny one. Super clean. And then, yeah, so we had tap 1, tap 2. Then we watched what was the highest time frame to confirm the bullish boss. Because you want to confirm your model 2, 1, 2, you need to break structure back to bullish. So internally, we had high, low, lower high, lower low. So this was the highest time frame possible to confirm the break of structure. But what did price do on the 6 hour? It wicked the 6 hour. Look, are we squeezing? Probably we are. Yeah. What a surprise. What a surprise. Look, this is funny. On the 1 minute, this is squeeze. These are all the shorts that are getting wrecked right now. We can see it live. Yeah. I don't know how many times I have to say it after the past few weeks, but market structure is everything. Literally everything. And most people don't understand it, or I don't know. But yeah, so first we SFP'd the market structure high right here. So never confirmed the internal bullish break. And then we had this as our new high because of the staircasing effect. So then you want to see a 6-hour break above this level. But again, we SFP'd it. So no confirmation of the Model 2. In which, like if you confirmed it, then this was your target. Then I would have been bullish on this chart, bearish on crypto. But we never confirmed it. Instead, swing filled the levels. And now it looked more like a distribution. It's a 2-tap model. And now we are back to the lows. And now I think our main idea, which has been all the time, the 1, 2, 3 is going to play out. And that is the new drive into those lower levels. Like here, we have untaken liquidity, super clean imbalance right here, and also massive demand below it. So there's a lot of reason for price to at least tap into that lower supply. So I prefer the Model 1 accumulation, but we can always watch what is the structure to confirm the bullish boss. Well, first it was here, low, lower high, lower low, lower high, lower low. This was created today. So to confirm the boss, you want to flip above this level. What did price do? It failed. So this is now our market structure level to break, to confirm the Model 2 accumulation. But right now it's selling off, creating supply. So it looks bearish until proven otherwise, which is the same as why I keep saying Bitcoin is bullish until proven otherwise. And look, this is shorts getting squeezed right in front of our eyes. Could have even longed this local tree drive, but I was not watching it. Gold is potentially coming into the demand. I want to look spot buying. And here you can probably live see. Yeah, look, this is and again, the bears have been trapped. Okay, let's watch the chat. Good morning, Mel. Rahim Ahmed, hi Didi, thanks for answering my question in group earlier. While you have it open, see my question was that the difference between your multiple CVDs and the OI. First response, but not sure of the different CVDs. Yeah, so it's not really like, so I have open interest that just shows how many positions are open, and I have CVD, perps, and CVD spot. So perps is basically if you use leverage. So if you go long or short with like 10x or 20x leverage, that are perp positions. But then you lend money from the market, so it's not your own money. Because if I play with $100 and I put use 10x leverage, I can play with $1,000 while it's not my own money. So I lend it basically. And that's what's like fake money. Because if I open a long right now and price goes against me, then I probably get out very quickly because it's a fake position. Spot is like the real buying. They don't have an invalidation, or they do have, but if it drops 10%, for spot it doesn't matter. While most of the pure positions are wiped out because they have a stop loss 1% or 2%, but 10% not. So the only way I use CVD is to just see which side is aggressive. Do we have a spot supporting the move? So as right now, we see price going higher and spot being involved, which shows me that it's a healthy move because real money is buying. If instead of this, we only saw perps longing, like this means people are longing, which is also a good sign. But if people are like spot not buying and perps are only longing, then I know that it's a very vulnerable move. And then as soon as price breaks structure, that I'm interested in shorting. But right now I see that spot is also buying, and that shows me that it's pretty strong. Got you, thank you. Sorry, what's the difference between perps versus open interest? Open interest shows you the positions, and CVD is like aggressive buying and selling. So here you can see if it pushes higher, then it's aggressive buying. If you go down, it's aggressive selling based on CVD. And the open interest just shows you the amount of open positions. So right here, you see open interest was not doing anything, which means there are no new positions being opened. Right now, price is pushing higher and the open interest goes up, which means new positions are being opened. Basically shows you the activity in the market. And often you want to position when activity picks up. So, hope it's clear. Otherwise, let me know. But yeah, BTC new highs likely. Yeah, hoped to get the long because it always feels nice to have a long while everyone gets stopped out. But glad I did not short. I guess, or I know, a lot of people have been wiped out of their short with this move. While there was literally almost no real reason beside a potential deviation. But as I said at the start, potential deviation, it's worth nothing. You either have the deviation confirmed or not, and you confirm it with market structure breaks, and not by this is an SFP, and now we did not take, let's see, we did not take the ultimate high, but we took extreme liquidity right now. So that is this high. If you, yeah, like this is too dangerous to short, but it would be funny if we take the high, because then the market structure is just once again showing how strong it is. Because at the start of this stream, I explained how this bullish, this SFP technically made that high a targeted high. And right now we see it right in front of our eyes, the strength of swing failure patterns. And then you can watch, how do we take the high? If we SFP it again, then the low that brought you there is a targeted level again. Break above it, and you have simply market structure continuation. So yeah, clean stream. If there are no questions, that I have to go because I have a coaching call. Not sure if he's watching now as well, but yeah, I have to be ready in 5 minutes. So last question with a breaker at 7.9, 7.8. 7. This one. Probably. Yeah. I don't trade breakers, but it looks like this is the breaker indeed. Gold long triggered. No. No, definitely not. It's only demand here. We had like 1, 2, 3 bullish balls. Now we are into demand. But this is demand. Price is coming down into it very aggressively, so that's not what you want to see. Yeah, so not interested in this. Let me quickly draw a new range. Yeah, so it looks more to me now like a redistribution with 1, 2, 3. 1, 2, 3. Key supply here held. And then your target is low right here. It's already playing out right now. So then this was the distribution. And then you can watch, does this potentially flow over into an accumulation again? Which can be like this, come back up. We have some clean demand resting below, which is like it's wick demand, but it's also 5-minute demand here, clean. And then you can watch, do you get like a 1, 2, 3 into that demand for longs? Yeah, that's what I will be watching. But I'm not in a position right now. Then I'm gonna send an alert at the low and into that demand. And that will be the cleanest for me. Now we took this supply, that extreme supply. Above, there's only liquidity. But since we took it, there's nothing above anymore. So if you get signs of an accumulation right here, then from there there's no resistance anymore until this level. So this would be the dream scenario. Get like a local distribution, which we got, into an reaccumulation, and then trade it higher. That's scenario 1. Scenario 2 could also be that you have this as low. This will be the longer scenario, where this can be like new range. Take out the low, and that you get a bigger reaccumulation range, for example, right here. But I would love the this scenario would be cleaner. Well, that's it. It's gonna be interesting what we do from here. But yeah, until proven otherwise. Structure, everything is bullish, so longs make more sense. But they did a nice job with this fake news around bombing. Sell off, everyone's scared to lose, shorting, and now squeezing them all out. Yeah, let's see. It just looks bullish to me. So no shorts for the time being. And that was also not a really clean long. Although we had that 1 hour SFP. So that was like sign 1 to look for potential longs. And then we had this local bullish tree drive. But yeah, not a hype. Cheers.